Hi everyone, welcome to the Accounting and Tax Podcast. Today we're going to talk about what happens if you receive a letter from IRS. Here's the thing, the IRS doesn't just look for shady businesses or big corporations. Even the honest owner can be subject to an audit. So it's not about IRS looking for something said you are guilty or not. You just need to prove your expenses. You need to prove whatever you claim is legit. So if you not be ready for an audit and then just when you receive the letter you start organizing for an audit, it's like preparing for a final exam after you already failed it. So you need to be ready. You need to always be ready for an audit. Means you need to be organized. You need to know what expenses you already claimed. You have to have a backup. You need to have support for all of your numbers that you claim. So it doesn't mean that you just want to avoid penalties. You just try to maximize your legit expenses. That's a true statement that the number of number of audits has decreased, but it doesn't mean it's eliminated. You're still subject to the get might be get audited. So there is a still chance you to be audited. So if you have a Schedule C, if you have heavy cash business, if your deduction is high, then you're subject to the your risk is going to be higher. If there is a fluctuation between your deduction this year compared to the last year, there's a 25% increase in your travel expense. So these are all the red flags that you might be subject to the audit. So even though the number of the audits has decreased, it doesn't mean that audits has eliminated. You still need to be always be ready for audit. So there are a lot of things that you might get audit if you're in a like a business is like a heavy cash business. If you have a Schedule C with the high deductions, and then in, you claim loss. For example, in the Schedule C, in a couple of years, you just claim losses. First year makes sense because it's the first year of operation. Overall, you expend your expenses is higher than income. That would be expected. But if the IRS see in 2019, 2020, 2021, in 3 years in a row, you have losses, you claim losses, mean your expenses are higher than the income you produce, it's going to be a red flag. First, IRS say, why do you have that business if you're not making money and you're losing money? And then the other thing is the areas like if you have a business and then you have a high travel or travel expense, meals, these are the areas that the IRS will look into it. So make sure you have support for all of those expenses because IRS may look into it, especially travel, especially meals, and especially when there is a place that you may expense your personal expenses. If you miss reporting your 1099s, that's automatic match. So if you don't report your W2 or 1099s, IRS automatically is gonna figure that one out. It's gonna be mismatched. So anything when you receive a 1099, the same amount is reported to IRS. So if you don't report the same amount, you will gonna get a notice. So there is a lot of things that we can do to avoid any potential audit. So yes, all the businesses like cash heavy businesses, restaurants, salons, constructions, even like ride shares are the businesses that are they're higher risk. So there are, and then recently the crypto, anything related to crypto, because it's a very new thing for everyone, is subject to the higher risk for a get audited. So when you get to that point that you receive the letter from IRS, again, it's not the point that if you're guilty or not guilty, you just need to prove. You need to prove whatever you claim as expenses. You need to have support for all of your numbers. So if you don't have a proper bookkeeping, if you don't have proper documentation, it's going to be a problem. And then on the other side, if you have a good system, if you have a good bookkeeping, if you have everything in place, if you have backup for all of your documentation, IRS go through your files easily, and then the risk is lower. But the first thing IRS see if you're organized or not. If you're organized, if you have a proper system in place, if you have proper bookkeeping, proper documentation, the IRS go through your documents faster, and they assess the risk lower. So you need to make sure you have the support for all of your invoices for all of your invoices paid or received, for your mileages, for travels, for any expenses that you claim as a use of home office. If you use payroll records, bank statements, credit card statements, all of these needs to be documented correctly. So all the invoices you paid, all the invoices you received needs to be documented. It's best to document it based on the year, by the label, payroll reports. These days, you can get those payroll reports from the third party, but make sure you have access to those payroll reports. If you reimburse your employees for a mileage, make sure you have backup. If you overall you reimburse your employees for expenses, make sure you document it correctly. Copy of the tax return you filed, all the notices you received, anything that you related to your tax, make sure you documented, you have the copy. And make sure you have it in the digital version these days, to avoid just filing documents that's gonna take your audit your audit's gonna take longer, and then the risk might be higher. So technically, you need to keep your receipts and then you support invoices, everything for 3 years. But if IRS realize you haven't report your income, like 25% of your income, if there is a difference between actual income and then the amount of the income you reported, the IRS can go back to 6 years. So the best option is to keep it for 6 years. The other thing, if there's a fraud involved, if the IRS said there is a fraud, there is no limitation. They can go after any time they want. So to be sure, make sure, because you're not going to do a fraud, so it's better to keep it at least for 6 years. So the best way these days to be ready first with all of those apps, with all of the digital apps, it's the best to keep the digital copy of your receipts. You need to use the proper software, like a QuickBooks, Zero, organized based on the categories for the receipts. If you're keeping a digital copy, have it for each year, 2025, 2024. These are the categories. These are for office supplies. These are for equipment. So make sure you have proper documentation. If you have a business, you must have a proper bookkeeping, and you need to have a good software. So for your payroll, you usually have access to your payroll company, but make sure you keep those payroll records. So one of the areas that is in higher risk for audit is when you kind of use your personal expenses and claim it as a deduction for a business. So you need to make sure you separate those. It's okay. Sometimes you pay from your business account for personal accounts, but you need to make sure those are not going to be claimed as expenses. It's claimed as a distribution or a loan. So it's always make sure if you pay something, if you went to grocery shopping, you paid something from your business card, doesn't mean because you already paid from your business card is a write-off. You need to reclassify those as distribution and not claiming as expenses. On the other hand, if you go to a restaurant, it's a business related, put a note on the receipt. I meet with this person, we discuss about that. So if you have more documentation, your risk is going to be lower. If you travel somewhere, it's a business related, document it. Okay, we went to travel. I have a meeting with this person. We discuss about this. Very brief description may help you a lot. When you get to the audit, if you have all of those documentation, then you're in a better place compared to the time you just send in a receipt. Travel to Hawaii might be a business related, but you haven't documented. 6,000 travel to the Hawaii, so that's going to be a risk. So the better documentation is whenever it's a personal, make sure it's a personal, not claim. If it's a business related in travel or meals, make sure you have a note on your receipts. So if you claim deduction for your contractors or employees, so usually the best way is IRS. You can show the like a payroll reports that okay, these are the payroll reports, these are the payroll I really paid, and these are payroll taxes. Then it comes to if are those actual employees or contractors. That we had a podcast before that we discussed about when somebody is employees, when somebody is a contractor, but make sure you follow those rules because those very important to make sure because it's part of the audit. If you claim some contractors as employees or employees as a contractor, it's going to be overstated or understated your payroll taxes. So make sure you follow those rules. For the supports, you need the payroll reports, you need to 1099s, you need to sign contract agreements, proof of payments. But the proof of payments, again, it's going to be more, you can obtain it from your payroll report, from your payroll company, or however you run your payroll. Most importantly is if you classify employees as a contractor or employees correctly. So if you get audited first, don't panic. Just sometimes IRS needs some clarification for some of your deduction. You deducted home mortgage expenses. You just want to make sure there is some calculation, because if your mortgage balance is 1.5 million and you have limited to 750, IRS just want to double check you did the calculation right. So not all the IRS notices should be scary. So if you receive a notice from IRS, don't panic. Just read through it. If you need to consult with your CPA, for sure, please consult. Make sure you follow the due dates. And then always look for, if there is something you're not sure about it, for sure, consult with your CPA, because if you don't follow up with the notice on time, you may be subjected to the penalties, interest, or even like get audited. So make sure your response to your IRS notices on time. So if you get audited, the worst things you can do is just handle it yourself. First, because you don't know the IRS codes. Not a lot of people knows it's the IRS codes. If you can read it and not falling asleep, you're an accountant already. Even even the accountant doesn't like to read the IRS codes. So if you receive an IRS notice, if something is very simple, okay, provide your W-2s, that's fine. You can handle that. But anything else, please consult with your CPA, because they can address your question much easier, avoid a lot of penalties and interest, and save your times. So hopefully you don't, but if you receive an IRS letter, again, don't panic. Please reach out to us if you have any questions. Please email us at helpdesk@alamircpas.com, and we can help you to go through the audit or respond to your IRS notice. So the biggest mistake that you make when you get audited is do it yourself. And because first, you don't understand the tax code, and then number two is you may give more information that IRS asked for. So make sure you don't give more information that IRS asked for, because it's gonna bring more problems. Or maybe not, but you still don't want to give it more information if somebody haven't asked for. And then just if you get audited, be honest. It's not about beating IRS or anything. You just want to prove your side. And then if you follow the instruction, if you have a proper bookkeeping, proper documentation, there's nothing you need to be worried about. You have a legit deduction, and you're just proving it to IRS. The best piece of advice is be ready for the audit. Review your financial as if it's going to be audited. Look at your financial as it's going to be audited tomorrow. Maybe see if the numbers make sense. Look at your travel expense, compare it to the last year. Just put yourself in the auditor's shoes, like what they're looking for. So the first auditor should be yourself. That would be the best advice I can give to the business owners. Thanks for listening to this podcast. Today we talk about how to handle IRS audits, IRS notices. Again, if you have any questions, please reach out at helpdesk@alamircpas.com, and please subscribe, like us in the Spotify, any other social media, and support us. Thank you for listening to this podcast.